David Burrows, President and Chief Investment Strategist at Barometer, is taking your calls on North American large caps. Bracebridge, Ontario is promised now for Jean. Thanks for holding, Jean.
Oh, thank you for taking my call. And to David Burrows, very much information as I waited. I'm thinking of buying Magna or Linamar or Veresen, but I don't know too much about Veresen.
Okay.
Do you have a favorite play in that space? Do you like the space?
So look, we really like this space for a couple of reasons. One, because it gets you exposure to economies really outside of Canada. If I were to look at them, we own both Magna and Linamar. They're both big positions in the firm. So one of the things we believe is that as the consumer gets better, auto sales continue to be strong, and we saw that in the most recent numbers. Auto sales, best month of sales in the U.S. going back to 2005. So that's big, 10 years, showing big improvements. Magna is a great global play on the auto industry. They benefit around the world from many different brands. Their history has been they've done a really good job at adding content with various manufacturers. There is upside in the stock in that it is cheap relative to their peers, despite the fact that financially the metrics look really good. Mm-hmm. There's a wild card that is that they are really in the assembly business, and there's actually, I think, a very real shot that if Apple got into the car business, Magna could have some real upside. But that's an option, right? That's an option. So I like Magna, and I think you get good dividend growth there. They've done a very good job.
Do you like it more than Linamar?
We also really like Linamar, and I'll tell you why. Linamar is in the drivetrain business. Every car company has been working at creating fuel efficiency, and the biggest driver is in the drivetrain and transmissions, and Linamar is solidly in that space.
Not about all aluminum bodies anymore?
Well, that's part of it. That's part of it, but half of it is coming from the transmission and the drivetrain. So I would own them both, and they're both different. They're both behaving extremely well. It's in the right sector, and it gets you exposure really to things outside of Canada, which I think is something you want to try and do.
Jean, thanks for joining us from Bracebridge. Chelsea and Hamilton, welcome to Market Call.
Thank you so much for taking my call. I so appreciate it. Amazing amount of information today. There was already a talk about the oil situation, but my question is to do with Cenovus. If you could explain why Cenovus had to raise so much money in February and do that public offering at 22.25. Right. I went in at 24, and so obviously I'm losing quite a bit. And I just want to know if you have any idea as to the stability of the company, right, and if it's a company that I can hold the money. I will hold it, thinking that at least I'll break even. If I hold for another year, I don't mind. I just don't want to lose any more money, right, because I did get hit pretty badly with the oil situation. Thank you so much.
So Chelsea, the fact that Cenovus raised capital is not unusual given what's gone on. If you look at the U.S., there have been like a couple $100 billion of capital raised in equity for the oil producers who are trying to shore up their balance sheets. Lots of them were trying to grow by using debt and wind up in a situation where their cost of production is just too high. Cenovus, I believe, is one of those companies. I would be very careful, hoping for something to break even. There's a bad statistic, and you just need to be aware of it. If I offer you $50, but then give you the choice to flip a coin to either get 100 or 0, 90% of people will take that $50. Mm-hmm. If, on the other hand, I say you're facing a certain $50 loss, but if you want to roll the dice, you could either lose 100 or break even. Most people will roll the dice hoping to break even. That's why people aren't good sellers. Sometimes when something's going against you, you have to recognize you've made a mistake and drive on. I think there's a very real risk that this sector is going to be difficult for a while. We're in a time when there's money to be made in other sectors. So if your job is to have your odds of success in your favor all the time, you have to be a good seller. And don't let a little mistake turn into a big mistake. So I would sell the Cenovus.
So that, by your example, is $50 that you're not deploying somewhere else.
The money's gone right now, right? The money's gone. As of today, the market doesn't know what you paid, and I hate to see people lose money, but you have to say, if I could have a choice today, where would I have my money? Mm-hmm. Do I want to be in something that has deteriorating situation or an improving situation? with very little cost of friction. That's one of the great things about public markets. It's easy to sell things and reposition. I think you should consider repositioning.
Thank you, Chelsea, for joining us from Hamilton. Another brief break. When we come back, more of David Burrows, the President and Chief Investment Strategist at Barometer, taking your questions on North American large caps at 1-855-326-6266. We're coming back after this short break, off to talk about potash.